Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary. It's Monday, June the 2nd. Thanks for joining us this morning as we take a look at our trading day ahead. We have some big moves in some of these outside markets overnight. Wheat having big moves in the morning hours this morning with limited action in the grains, corn, soybeans. So overnight, the U.S. dollar is a little bit softer here. Natural gas sharply higher along with crude oil. Look at crude oil up 4%, natural gas almost 6% higher. Stock market is a little bit softer this morning, and in reaction, gold and silver are seeing some safe haven inflationary type buying coming into the marketplace. So corn's up 3.25, but spurred on by strength in the wheat, almost 12-cent gains in Chicago, Kansas City. Minneapolis closed with about 8-cent gains overnight. So some good big moves in the wheat. We'll talk about why here in just a second. The soybean complex is a little bit softer once again. We've broke through some moving averages that maybe have set off some sell pressure. Bean oil was really the culprit on Friday, dragging soybeans down. We're following follow-through selling, but bean oil is higher while meal trades lower here ahead of the census crush report out later today. Corn's up 3 in the July, D's up a penny. Let's talk about markets and what's happening with everything here. As always, you can follow us on Twitter at Midwest Markets and at Brian Hoops for latest market information. Visit our website, MidwestMarketSolutions.com, for our newsletters, YouTube series of videos, and text message service. I'll be on RFD TV this morning, 8:15 Central Time, talking about the markets, as well as Wednesday, Thursday, Friday of this week. And it looks to be a very active week with June cattle option expiration on Friday. The unemployment numbers coming out Friday morning as well. All right, let's get into some happenings here. Weather forecast looking mostly favorable. Drier conditions forecast for that eastern belt could allow some more seedings to be completed. Heavy rains again forecast for the winter wheat areas, which is not what we want. And at this time of year, a lot of the wheat in this area is ripening. The head is turning brown, and you don't want additional rains. You want sunshine, warmer temperatures to develop that head and ripen the crop out, and that's not in the forecast this week. And that's why we're putting in some premium here in this wheat contract. It's a possibility we'll have yield losses. Too much rain. Usually rain's a good thing, but it's too much right now when we're trying to harvest that wheat or wanting it to get ready to harvest. Crude oil sharply higher overnight. OPEC announced it will maintain current production levels through the third quarter. Remember, last week it was talked about, rumored anyway, OPEC would have normal production levels or increase their production levels by 411,000 barrels per day. That put some pressure. We traded below $60 a barrel off of that news. But this over the weekend and this morning, now we're seeing OPEC announce maintaining these production levels. That's put a lot of premium into the market here. We're going to run into resistance in the 63, almost 64 area for July crude. That's key areas to watch. Saffras raised their estimate for Brazil corn production 139 million tons, up from 135.1. Pretty significant jump. What this means is there's going to be more U.S. demand, or there's going to be more product in the world trying to compete with U.S. demand. Brazil's got more corn to sell. That's puts pressure, especially against our July corn contract, as funds are liquidating those longs there. I think if they go short, it's going to be in the December contract. They don't have enough time for July, and with the big acres of December that we're expected to see, we're going to see rallies be sold in that contract. Census crush report does come out this afternoon, 2 o'clock. Estimated crush at 202 million bushels versus 177.6 last year. Oil stocks at 2.1 billion pounds, well below last year's numbers. And corn for ethanol usage at 434 million bushels, up about 12 to 13 million from a year ago. Condition ratings will be out after this close today. Big reports today, at least 3 of them. And corn, spring wheat, and winter wheat conditions all are expected to improve this afternoon, with initial soybean ratings near 70% good to excellent. Last week, cash cattle trade in the southern plains sharply higher, 222 to 223 live, $2 to $4 better than the prior week. In the north, we were 234 to 235 live, 365 to 370 dressed. So it ends up $4 to $5 better than the prior week, $5 to $10 higher dressed compared to the prior week. Some very strong cash markets, and we're called higher again to start this week. In the box beef markets, cutouts higher again, with choice adding another $5 last week, and select up about $4.69. The product has been moving higher. Packers cutting kills. In fact, this was the lowest Memorial Day kill, I believe, since the 90s, 94 maybe, something like that. It's been a long time, and that helps these box beef values get propped up. So we'll look for additional cash gains this week as the numbers remain tight. In fact, there's no evidence we are rebuilding the herd inventory at this point in time. In fact, if anything, we're tightening it even further. Have a great day, everyone. Good luck. Good trading as always. Reach out to us if you have any questions or comments. This has been Brian Hoops from Midwest Markets.